Hey, good afternoon, everybody. Good afternoon. It's Lifestyle Focus Friday. Hi, I'm your host. Welcome, welcome, welcome to it with you today. How are you doing? How are you doing? Hi, Don. I see you out there. I see you inside the room. I can see you. I see you popping in on the back office today. Hey, Sam. I see you popping in on Facebook. What's happening? For those of you that are Lifestyle Focus Wealth community members and you want to join a group, and look, there's a link right there on the page. And all you got to do is click it and you can join our live studio feed for today. Sometimes it's good to get live questions, and sometimes it's good to be able to see your faces. Sometimes. Not when I'm on vacation, but that's okay. Out there, come and join us as well. I see you out there on our Zoomcast. Good afternoon. Good afternoon. So we got all eyes on us early today. And if you're out there just hanging out and you're just peeping in, I just want to say hello. This is Lifestyle Focus Friday. I'm your host, Ronco Johnson, and today we're going to talk about a few different topics. Over the last few weeks, we've been getting emails offline and on our YouTube channel. So I'm going to go ahead and tell you, if you have the opportunity to go on YouTube and look up Lifestyle Focus Wealth with Ronco Johnson, join our YouTube channel, folks. Come on. Come be a part of the conversation. Come be a part of the conversation. I just want to welcome everybody to Lifestyle Focus Fridays. This is where we talk where millionaires and billionaires do, and what they do with the secret financial tools that we've been talking about called life insurance. So we would love for you, before you get started today, to simply don't forget to like, subscribe, and share. And if you're on YouTube, click the notification bell. That way, everybody can be involved, and you can get all the updates to our brand new content that we're trying to push out for you every single Friday. And if you have questions, you can always send them to us. You can catch me at Ronco Johnson of your own and talk to you about that as well. So for those of you who are new to Lifestyle Focus Wealth, and you're I just want to tell you, our community has done some spectacular things already. We're seeing individuals open their insurance products, and we're seeing individuals who have learned to pay off their cars, to minimize the interest that you're paying financial institutions. We've seen individuals pay off student loans. We've had people pay off mortgages. We've helped individuals just want to manage their money better and take advantage of capital that they're already using for the long term by using some simple IBC concepts and strategies. And that's what we get in our individual or group sessions and our practice, so that you can learn these new habits about how you conduct yourself with money. Hello, everybody. If you're just joining us, leave me a comment. Say hello. Tell me where you're from. Perfect. Perfect. Perfect.
From Georgia.
I see you, Leela. I see you. Thank you for joining me today. We've been missing you. We've been missing you.
Yeah, I've been missing you guys too. It's okay.
That's all right. That's okay. Has it's busy, right? We got to wings and find time to here today, and is important to me because I know there's other things you could be doing with your time, and you know that I say that all the time. Time is the most valuable thing that we have to offer. So thank you for
Right.
you got that very much. So uh, thank you for joining us. So let's see who else we got hanging out in the back office. I know we got a few different people coming in. So just so you guys know, we're on all the different streams right now. So I'm still learning how to pick out which ones I'm looking at the same time. So if I miss you in today's meeting, please just put your question down in the comment and allow me the opportunity to get to you. And so bear with me. I'm just a normal old guy. I'm just a normal old guy, just doing normal old things. And I'm glad that you're a part of it. Hey, listen up. If you are new to Lifestyle Focus Wealth, I want you to think about joining the community right now. It is $16 a month if you pay for the annual subscription, or $20 a month if you pay monthly. And all you have to do is go to www.lifestylefocuswealth.com and register today. You get the online magazine, you get the online events, you'll get newsletters, you'll get online articles, premium articles. And today, after today's program, if you want to go down to in the description and take a look at today's article of the week, I'll greatly appreciate it. I think it will benefit you. And I'll talk about that a little bit later on today. So, the purpose of our Lifestyle Focused Wealth community is very, very simple. It's very, very simple. Tool of wealth that every and billionaires. I think that's important. I think that's important just to know how to do, right? I think that's important. So do me a favor. If you're out there and you can see my words right now, or you can see what's going on, I'm still waiting on some folks to join the room. I need you guys to be on time. I need you to be on time. Why? Because we're doing so much so fast and trying to give everybody quality information, and people only stay on for just a second before they want you to get into it, right? And we don't need you to hurt my show because I'm waiting on you to join. Does that make sense? Does that make sense? Shout out to our sponsors, L.R. Johnson and Associates, and all of our agents out there serving you and the community. Know that there's some folks out there talking about us in a great way, and I'm loving what we're hearing. So we got some new advisors popping in. If you're interested in learning about becoming an insurance advisor, or want to get your insurance license, or you need some coaching, give us a call. Let us talk to you. We're always interested in knowing what is going on in the community, right? And learning a little bit more and more about you. So keep us informed. So let's talk about it today. What is today's topic? Today's topic is pretty simple. It's probably the most simple topic I've had. There comes a point where it becomes important to know, what are people asking? What's the question that people are asking, right? we have people beginning to ask questions, you out there online, and we're beginning to. We want to be able to give you the information that you. You know, a lot of times, like on this show, Go Out, Are You Ready? Is to help you avoid those lights out moments. Avoid a lights out moment that someone has that you're watching on TV that's making a mistake right now. That's a lights out moment. Maybe you're watching the news and you see something crazy happen and they're having a lights out moment. This information helps you to make better decisions, go the opposite way. I've learned so much from watching other people go through situations. But wouldn't it be nice if you had your coach, your mentor, family members that knew how to make you avoid all these situations? If that were possible, I think everybody would be so much further ahead. I wish a little bit about what not to do. Stop experimenting on what we're trying to do, right? So let's get right into it. Let's get right into it. Number one question today that I happen to take from an email that I got last week. And it was how can we start the topic of life insurance? How to start the topic of life insurance. You know, I think that's a wonderful question, and I think it needs us to dive into it a little bit further. You know, the focus on life insurance is a discussion that I feel it needs to be based around financial. Ladies, typically when I'm having a conversation with the ladies market, the one thing that they want to talk about the most is making sure. What we want to talk about today is, hey, well, how is it important for you to have a long-term plan? The factors of, hey, when my lights go out, I want to make sure we're ready. I want to make sure that our family is ready, especially if you're not the one that's individuals that are married and maybe you have one breadwinner and maybe you don't share the same view. Mine, especially for the person taking care of the home and the children and all the different things. It's how do we maintain our lifestyle if a lights out moment were to occur today? It's not a matter of if it's going to happen. Everyone that we talk to does. And so why should we wait to start having that conversation? Does that make sense? Does that make sense? I see you, Donna. I see you popped into the other place. I was looking for you in the other studio. I see you out there on good old Facebook now. You know what happens when you have this conversation? Let me be honest. Family, your children, you can breathe easier because these are the conversations that must be had to make everything feel, appear more life where they know that they're taken care of. This is a conversation that we can have while we're living to say, hey, babe, you're all right. Hey, sweetie, you're all right. Son, you're prepared for it. You don't have to be fearful. These are conversations that open up and broaden and make people closer. I think the family gets closer when you have these conversations. I know at first when you think about it, who wants to talk about the gloom and doom until you're forced to? And when you're forced to and you're not ready for it, yeah, it becomes a difficult conversation because we don't know where the money's at. We don't know how to pay the bills. We don't know what it may for. You're clear about. I think this question today is an important question for most people to just dig in. It's 2024. It's the beginning of our year. It's a great time to put that on your board of conversations that must be had to get it out the way. That means we got the next 11 months of the year to exhale. We can exhale. We can get our infinite banks open and are becoming our own banks. But the truth be told, the best type of life insurance to have is the type of insurance you have in force when you need it. That's exactly right, when you need it. So this financial tool that we've talked about, this special secret financial tool called life insurance, there's so many great things about it. You can find it in our IRS code. You can find it in our tax code. Why? Why is it so important? Well, the tax advantages of life insurance is what makes it important. Never mind what these yahoos out here who are using the terms of life insurance for clickbait. And they tell you how much they hate it, but at the same time they use it. It's crazy. It doesn't matter if it's term life, whole life, universal life. It doesn't matter. It's the one that's going to pay out when you need it. And typically, that leads to our next question. Typically, that is money that typically goes to your family in lump sum, tax-free. Tax-free. So that is something that we definitely need to have in 2024. That was a great question, by the way. So, back office to put you guys on mute. I hear you guys in the conversation over here, and so does everyone online. We can hear you all over the place. So put your questions in the comments. Put your questions in the comments. Okay. Here's a question we got. Here's a question that's next up. What are the tax implications to life insurance? What are the the tax implications of life insurance when it's time to pay out a death benefit? Okay. The death benefit typically tax free. Okay. But this question is a little bit more in depth than normal. Tax implications to life insurance can be as such. Take the death benefit instead of payments or take a payout option. Here's what happens. You can take this money, any money that is typically, so in other words, if I received $100,000 and I were to, take payouts over a period of time, those dollars could be taxable. So you want to be sure to understand what those limits are. So as you can see down in our scroll, if the could push the taxable threshold for estate taxes, well, if you're over a certain amount of money, well, there's a possibility that your heirs could end up having to pay the estate tax on the assets above that threshold. So, that changes from time to time. So you just need to be aware of what the thresholds are and look at it. And if you're aware of those thresholds, we want to make sure that we're in line. The purpose of having a death benefit in place is to truly eliminate any estate taxes if you can. And one of the big purposes of how we get rid of the estate tax is having the trust in place. So by you sitting down with your advisor, constructing a plan that makes sense, talk about where your life insurance proceeds are going to, the family estate. And that is going to allow the opportunity to, once again, take a deep breath. Because family members who don't have as much as certain individuals that do in the family, they're really wondering, how in the world am I going to pay for mom and dad's assets? I may have much more than my daughter has. I may have much more than my spouse has, or what have you, and they have no ability to pay that tax. So life insurance is a wonderful way of tax is going to be a certain amount of money. There is a tax-free benefit of life insurance that's coming into the family. If you're out there and you can understand what I'm saying, and you're down in the comments, please drop me a thumbs up and let me know. Let me know. I got a third question. How interest on death benefits work? Okay. Here's how it works. Again, when you receive a death benefit, you need to be sure to understand this. That those proceeds are typically income tax free. So there's no taxes on a lump sum death benefit, right? However, you can see down below, if the death benefit is paid over a period of time or paid out in installments, the interest that is earned from those installments can be taxable and can become taxable. So most people don't receive their payments in installments from life insurance. Most people tend to get, however, if you're taking your payment in installments, the interest from those installments may be taxable. So you can see those payments over time. So the amount of money that you have, once again, if I was going to get $100,000 of a death benefit, lump sum, I don't have to worry about paying any taxes on that. But if I were going to take a payout of $100,000 over a 5-year period, right? And let's just say I earned a percentage or an interest rate, say $20,000 a year for 5 years, but I was earning an interest rate on that installment payment. Those installment payments have interest that have accumulated. So please be questioned that people out here want to know. People out here want to know. So what are your questions? What are your questions today? You got that one back there? Perfect. Perfect. I'm searching. I'm searching. I'm searching. Y'all, you know what? I have to become an expert at reading all this stuff, you know? Speaking of insurance, when your eyes were going bad, you got to put on those goggles. You got to put on those glasses. That way you can see what's going on. Sometimes you just got to be able to laugh at yourself. So, from our guests, anybody in our guests got additional questions? That's our top 3 questions today. I'm looking. What are ways that you can improve your relationship with money? Good question, Leland. What are ways that we can improve our relationship with money? You know, my personal opinion is have the discussion about money all the time. The more and more we talk about it, the less threatening it becomes, right? Um, Over time, we find this in our coaching sessions. You know, individuals they'll come in and they're timid about their finances. And what is really strange is when people meet us for the first time and they want to talk to us about their finances, sometimes they hold back. They don't want to tell us what their assets are or what have you. Our, our goal is to help. But if we don't know the full story, we can't help you. But you got to be able to have about money, number one. And then be open to the fact that some of the things that we've learned about money may not be accurate, may have come from a place of scarcity instead of abundance. And if you don't have to make all the change on time, sometimes it's not possible. But just having the idea of things that I can spend and buy quality things, how can I leverage it? The relationship becomes a little different. I was sharing with some folks on an earlier broadcast that how difficult it becomes. Relationship with money is being understood from a different place. Some empowerment suggestions. That's what you want. Some empowerment suggestions. I think that all works. You know, if you're able to go to bed at night and know it's pretty comfortable, right? It's pretty comfortable. But when it becomes stressful. It becomes stressful. Well, when we're talking about the insurance financial tool of insurance, that the money that I'm spending is an interest on a tax deferred basis, on a continuous basis, because I'm still earning a dividend on the money that I was planning to spend anyway. So, in other words, if I'm going to go out and pay for my next trip, and I'm going to pay for, I'm losing the power of the cash accumulation opportunities. I'm losing that opportunity. But what is empowering to know is, well, wait a minute. By me taking and having this conversation about what people want to know, by me having this conversation about how the interests of death benefits work, by me having the interest about having the conversation about how to get into life insurance and why this topic is so important. And that's really what we're here to do, is to provide you more financial education, more financial literacy, and hope that your financial intelligence I define as taking all to help you build your wealth. We're not saying that insurance is the only thing out there. No, It is the platform. It's the foundation, if you will, and the launch pad for me to be able to borrow again. They're going to return some type of uh, return on my purchase, whether that be a business, whether that be real estate or the such. But these are wonderful ways to leverage these financial tools, and I think that's empowering in itself. And when you can answer that question, knowledge is power, but applied knowledge is even more powerful, right? Let's see what I got in the comments. I'm looking for you in the comments. I'm looking at you in the comments. What we got? Anybody else got questions? I can see y'all are being active. Y'all being active today. Well, that's interesting. Maybe I'm just a great teacher today. Maybe I'm just doing really well at making sure you guys get the education you need. Relationships and money. Okay. All right. The wonderful thing, the wonderful thing about being live is the fact that sometimes you get to try to stump. There isn't. The truth be told, after multiples and multiples and multiples and multiples, in years and years and years of these conversations, you become a base of information because you've seen it happen from so many examples out here of smart money practices. You begin to see people who didn't make so much of the smart decisions. And it's easy to sound critical, but I don't want you to take it that way. It's not meant to be a strike to anyone's ego, especially when it comes down to finances, because we need your ego to be in check. It's kind of like going to the gym. You can't be intimidated because you're lifting your weight. Not everybody's at the same weight. Not everybody's in the same weight class. Some of you are just starting out. Some of you have never heard any of these concepts. Most of us can say, well, look in the mirror and we figure out that it's time to make a change. Well, I can say this, Danielle. Thank you for asking the question. I see you out here in the back office. You're asking about why don't people know about these strategies? And, I've often asked myself that. There's a few different things. Information may be based off of demographics. It can be based off, those types of principles. So when you're some things are unspoken. You start to see a family member receive a trust. They're in that conversation of receiving their death benefits. They're in that conversation of receiving a death benefit and then having an opportunity to take lump allocations out over time. You're starting to see people who have 18-year-olds that blew through their net worth. You're starting to see these different things. If you're a person that comes from a more humble beginning, that conversation is not being had. You're not having a conversation about how to properly buy a house. how even taking lump sums of money when you get it and using the lump sum of money as leverage to earn more money and living off of the interest that you earn. These type of concepts and principles, they're just not taught. And there's multiple reasons. I just like to say that, we have to forgive our family members and those who come before us who just didn't have this knowledge. Even for myself, it's difficult to go. Who are you going to go ask if you come into $1 million and everybody has a great idea? And I relate that to the statement Mike Tyson said, everybody has a plan until they get hit, right? Well,
That's a fact.
that's a fact, right? So when you get hit by taxes, maybe you didn't know it. Maybe you weren't expecting it. I mean, you hear it time and time again from athletes and entertainers who start, and then in the next moment they got quickly that you don't have time to get ready. You almost got to be ready before it happens. That's why having a conversation with you in this broadcast is important, so that you don't have to get ready. You're already ready. But when that windfall happens to you, you know exactly the steps to take. We no longer can say that, hey, we don't have these strategies. We don't have these solutions. Hey, we're here. People like myself, we're here. Lifestyle Focused Wealth, we're here. Think tanks, masterminds, coaching sessions. You need to be a sponge to successful people. And that's where we will learn most of these details that we didn't even know exist. Like we said, life been doing it for hundreds and hundreds of years. But the impact that it has to be able to earn money on your own money while loaned out, or calling it revenue. So, passive income. I'm going back to the dog pound over here. Got questions. Questions are there tax penalties when life insurance beneficiary benefits are paid to a trust and children of the trust? And that's a great question, Donna. That's a great question. That really depends on how you have your plan set up. Okay. However, the life insurance is going to do what life insurance does. Life insurance is going to pass to its beneficiary, whether it be a person, an entity, a trust. It's going to pass 100% without taxes. Okay, that part happens. So money goes right into the Rockefeller Family Trust, and that lump sum of money now is available for a family member, maybe a house loan, car loan, student loan, or whatever, when the trustees see fit. But remember, there's an interest is due, or if there's interest that are earned on those allocations, the interest may be taxable. But now is how you want to pay it out to your children. Inside your trust, you can put, hey, there are people who have large sums of money that flow into annuities. And those annuities can pay lifetime income from anywhere from 5 year, 10 year, 30 years, or a matter of how you designate in your trust, how you want that to happen. That's a great question, Donna. There's a lot more to it. But when you sit down with your estate planning attorney or different types of stipulations in your trust, I think that makes things really easy for you, especially if you have someone that you don't know if they're going to be able to handle um, large sums. Great, great, great. Leela, did you have a question? I hear you talking there. What you got?
I was just saying, great question, Donna.
I'm looking at you. I'm looking at you. I'm looking at you. Hey, listen, these are the type of questions that people want to know. These are real life questions that we're taking this time. A lot of times we're talking at you. The one thing I like for this engagement to happen is so many of us have questions. And for you to sit down in a non-threatening way, you don't have to buy anything, and just ask the advisor. That's all we want to do. Just want to be a resource for you. Hey Sam, I see your questions. It's a good idea. You know, the way you ask that question is a tricky way an advisor would, right? I think having mortgage protection is important. I think it's a good idea in any way, shape, or form. What I don't subscribe to, the agents that or advisors that insure their debt and debt only. Here's why. Let's just say I bought a house for $200,000 and I bought a mortgage protection but let's say in 5 years, most people don't say their mortgage is 30 years. I buy another home that's 500,000. And let's just say that I'm not healthy enough to meet the requirement to buy more life insurance. Well, I'm stuck with the $200,000 of life insurance on a $500,000 mortgage. I subscribe to the idea of saying when you sit down, the biggest is your ability to earn an income in most cases. So if I'm earning it down with an advisor and look at uh, my ability to make money a year for the next 10 years, that's $1 million. So if I bought a house that was 200, then I moved to a 500,000, guess what? I've basically taken care of my human life value. My human life value then would be able to take care of my mortgage. So the actual idea type of planning all together. No use in just doing one or the other through the mortgage company, and I'm allowed to give my uh, beneficiaries the remainder into a trust or directly to them, however go about it. But as you see agents that get into the business, it's simple. If you see someone that bought a mortgage for 200,000, give them $200,000 worth of life insurance. That's not necessarily planning, but it does cover the means. But I take more of an approach from a planner than I do a salesperson. In here. Hey, I just want to remind you guys um, to go on our website. Take a look at our lifestyle focus well swag gear. Start pre-ordering. Order your swag gear today. Go ahead and if you already know what it is that you want, put it in the DM. We know we've given what you want. We'll make sure we get it pre-ordered and sent out to you. So this year you can start wearing your swag gear, especially when you want to be online or be out in public. And you want to talk to them about how you're focused on your lifestyle and how you're focused on your wealth for 2024. So, be sure to do that. And if you want more information about any of the topics that we've talked, www.roncojohnson.com, and I'll be glad to answer it for you. Man, we got folks out there today. They're on all the other platforms. Thank you guys for joining us. If you have questions, feel free to just DM us and send it to us. How about now? We got a few more minutes left. We got a few more minutes left that I can answer some more public questions. As I said to you, we're live today. Live on Facebook, live on YouTube, live on Twitter, live on LinkedIn, live on TikTok. We're all over the place. So, don't keep us a secret, you guys. Don't do it. Please don't do it. Don't keep us a secret. Do us a favor. Do us a favor. Tell someone. Tell somebody about us. Tell someone about us. All I want you to do is go here at the bottom of your screen, just like it says here or below. All I want you to do is give us a thumbs up, a like. That doesn't even cost you anything. And then hit the share button and share it with your whole group. Share it. This is where you're going to be getting some wealth principles from. This is where you're going to be getting some ideas of the wealthy from. Let people know. And if you're out there on YouTube and you subscribe, man, we greatly appreciate it. So almost we're begging you. No, we have seen enough of what's happening. This is a topic that's trending. And we all want to be a part of that vibe. Spending is not always, and it gives us a sense of leverage. It gives us things that make sense. You guys, I'm really I'm appreciating your likes. I'm appreciating your shares. I really appreciate what you're doing. Keep it going. Our goal is to grow this community. And now we're getting to the point where we're starting to see people as we're walking around at grocery stores, and people are asking me, hey, what do I do with my 401k? Hey, what do I do with my child rider on my policy when the kids get too old? And I love it. I love it. So I can't answer them all today. But I just want you to know that we take your questions very seriously. Out there, thank you for joining us. I love how she spells my name, Ronco, like with the C-O-E. Instead of Ron Company. But only I can pick on myself. I'll let it slide. Maybe your finger just slid into an E. But that's okay. I know who you're talking to. Getting all your stuff started this past month. I know you guys have had a handful. That's the Harvey family out there. Thank you guys for joining us. Any more questions we got from the public today? Any more questions? Man, sometimes I feel guilty that I'm making it this easy for you. Talk every Friday at 1 o'clock. We're going to go live. We're going to be here live. Even if I'm on vacation, I'm going to go live. All I want you to do is remember to share our information, subscribe, share, and please hit the notification bell so we know you're there. Go on YouTube right now and do that. And you can get all of our links. And if you don't know how to get to it, just simply, and you can find the latest information, or you can find out how to join our group. You can learn about our articles. You can use our calculators. Everything is right there. You don't have to want to meet me. You want to meet me, you want to have a conversation. Listen, let's have a real conversation. Just go online, click on the number 2, step 2, and you can get my calendar, your situation, live in your living room and mine. So I want to just say thank you again for all the support. I want to say thank you again for all the support to these moments when we're talking to you. So thank you guys for just hanging in there with us as we're continuing to grow. If there's any questions that you want answered and you're watching us in the replay, be sure to put it in the DMs and let us know what your question is. And we'll answer it as best we can on the next upcoming shows. I'm looking. Any more questions for me out there? You are so welcome, Ginger. Thank you. No need to be sorry. I just wanted to give you a hard time. I just like giving people a hard time. I got to have a little fun while I'm online. Is there anybody else? They got any more questions for me? Let me go back here and check our back office here in Zoom. And Leela, you got any more questions back there?
Yeah, somebody asked me, can you claim your insurance payments on your taxes?
Can you claim your insurance payments on your taxes? Can you claim your insurance payments on your taxes? The answer of that is also tricky. And I think the question that they really want to know is are your life insurance payments tax deductible? The answer to that is no. Life insurance payments are not tax deductible. Section 162 of the IRS shows you how you can make payments through a corporation, and those payments through your corporation can be business expenses to the corporation. So in other words, you can lower your corporate tax by paying your life insurance through your corporation. And that's a way to minimize your taxes. However, life insurance by itself is never tax deductible. It is. Well, that was a tricky one. I love when we get the question that stumps the advisor because, on the internet, TikTok and all the other stuff, you only got a 15-second segment, and sometimes the question or the statement deserves a longer explanation. And when we have to give a long, maybe that situation that you saw on social media may have been a little misleading. Just be careful and ask your advisor more and more about it before you act on it. And if you got the question, please send us a question in our DMs, and we'll be more than happy to answer it for you. The question: can you obtain more than one life insurance policy? Many times, insurance providers want to make sure that you don't go over a certain amount or a certain limit. So that from one company to the next. So you're not fooling anyone by going out and applying for life insurance in multiple carriers. There is a sense of how much insurance it will be. Tip factors that we use in the insurance industry. So, but to answer your question, can you have more than one policy? Below that guideline, yeah, absolutely you can. So there are people who have a policy just for paying off a house. Like I think it was Sam that maybe you maybe out of $1 million you got a policy that has $300,000 to pay off a mortgage. Maybe you got a couple $100,000 to pay off student loans. And maybe you got another one just to give income replacement and not to mention in the IBC concept, a lot of people use this as a strategy and a leveraging tool to grow some age on the policy. As time goes on, you can learn how to take policy loans against a policy to purchase another new policy. And in the future, if I'm in sales or if I'm in a business where I get large commissions, or maybe you're buying real estate and those types of things, there are some strategies out here that we do talk about that allow you the opportunity to borrow against one policy to purchase another, so that you can open up your banking system, if you will. One policy can only hold $25,000 of cash, and I came into $100,000 of cash. Where do I put that extra $75,000? In many cases, these extra policies that we're talking about can be into these extra policies. So why would I do that? Some people say, well, why would I do that? Well, if you really think about it, I'm kind of creating a situation that I can always pay back. And when I pay for a period of time, maybe I've had it outstanding for a year or two, I'm still earning money or dividends on the money that I borrow. So in other words, again, if I have $25,000 of cash value in policy number one, and let's just say I borrow $10,000 out of it, and I started another IBC or infinite banking type of product, and I use that concept. Maybe I open this policy with $1,000 and put $9,000 above it, but it allows me to put in another $40,000 bank, and the old policy at $25,000 bank, I have $65,000 total dollars that I could put away. Now, if I came into $100,000, I know that I have a banking system where I could put $40,000 into this plan and $25,000 into this one and still catch it up. So these are great advanced type of planning that we talk about. Having these policies and they move in a certain way. Looking at our next question today is, if you move to another state, that increases the limit that you can put in an insurance policy. I'm not quite understanding the question the way it is, Don. I got you. But individual and the insurance company. The individual and the insurance company, when they approve you for insurance, and whoever you're working with has structured your plan, your change. It wouldn't matter what state it would be in, because the insurance companies typically of what you make. Okay, so those are limits based on the carrier and what they have for the underwriting of your policy. But to my knowledge, that doesn't have anything to state to state. It's more carrier to carrier in their limits and their thresholds. Good question. Good question. Man, we love it. We love it. We're just taking these questions all day long. You guys have been really active. You guys have been really active. I want to just say once again, thank you guys for being a part of our family, being a part of our podcast, being a part of the question, being part of the conversation. Well, like we promised, it's only an hour, and we have reached our time for today. So I want to thank you guys for stepping in and remembering to press the like. Give us a thumbs up, sharing it with your friends, and don't forget to hit the notification bell. Hey, that's my time today. I'm Ronco Johnson. This is When the Lights Go Out. Are you ready? And today is Lifestyle Focus Friday, so I want to wish you blessings and much more abundance to come over the weekend. And we look forward to seeing you next Friday at 1 o'clock, right here at the top. Have a great weekend.
Thank you.
You're welcome.
Talk to you later.